Hey everyone, welcome back to Corporate Decoder. Today, Spire Global just filed an 8K announcing a new executive hire, and I am seeing a clear strategy shift hinted at in the compensation details. Quick note, this is not financial advice, just my take on public filings for educational purposes. This hire signals a big focus on sales and growth, and the agreement shows how much the company is willing to invest. Alright, so Spire Global Incorporated, the company behind the ticker SPIRE, has filed a current report, an 8K. This is like a special bulletin from the company to let us know about some pretty important stuff happening. What they announced here is the appointment of a new Chief Commercial Officer, a big role in any company, especially one focused on growth. This person is Eric Mellinger, and his role officially starts on the 3rd of August, 2026. The company itself is incorporated in Delaware, and you might know them from their stock ticker SPIRE. They are in the business of specialty business services, and as of lately, their market cap is around $470 million. They have about 372 employees. Now, the really juicy part of this filing is under item 5.02, which is all about changes in the company's directors and officers. This is where we learn about Mr. Mellinger's new job, and more importantly for us, how he is going to be compensated. He is 61 years old and comes to Spire from Mantech International Corporation. Before this, he held several business development roles there, including Vice President for Business Development and Growth Leader for their defense and space sector. His experience there, especially in growing business pipelines, sounds like exactly what Spire is looking for. Let's break down the pay package. This is where you see how much a company values a new executive and what they expect from them. Mr. Mellinger gets an annual base salary of $385,000. That is a solid starting point. On top of that, he is eligible for an annual cash bonus. The target for this bonus is 80% of his base salary, so he could make an extra $308,000 if things go well, assuming his base salary stays the same. This bonus structure shows a clear intention to reward performance and tie compensation to results, which is pretty standard for these kinds of roles. And then there are the stock awards. He is getting 150,000 restricted stock units, or RSUs. These are essentially shares of stock that he'll receive over time, based on him staying with the company and hitting certain milestones. The vesting schedule is spread out over several years. It starts with 25% vesting 1 year after the grant date, and then the rest vests in smaller chunks over the next 3 years. This is a really common way for companies to keep executives motivated and aligned with shareholders. It means he'll be thinking about the long-term health of the company because his own wealth is tied to it. This stock grant, combined with the bonus potential, means Mr. Mellinger has a lot of incentive to drive sales and grow Spire's business. Now let's talk about what happens if things don't go as planned. The agreement includes provisions for severance pay if Mr. Mellinger's employment is terminated without cause, or if he resigns for what is defined as good reason. This is a pretty standard protection for executives, and it often gets more generous if a company is undergoing a major change, like a merger or acquisition. If he is let go without cause, he'll get a lump sum payment equal to 100% of his annual base salary. So that is $385,000 in this case, paid out on the next regular payroll date. This is often called non-sick severance because it is not tied to a change in control, essentially, a standard termination payout. He also gets an additional payment equal to 100% of his target annual cash bonus, so he would receive that $308,000 target bonus amount as well. Less taxes, of course. On top of the cash, the company will also cover his group health insurance for a full 12 months. This is a significant benefit as health insurance can be very expensive when you have to pay for it yourself. Finally, they'll pay up to $15,000 for outplacement services. That means help finding a new job like resume writing and career counseling. This whole package is pretty generous and shows the company is serious about providing a safety net for their key executives. Now, things get even more interesting if there is a change in control event happening around the time of termination. A change in control is basically when the company is bought or merges with another company. If Mr. Mellinger is terminated without cause during a specific period around such an event, his severance package gets a significant boost. Instead of 100% of his salary, he gets 150%. That's a 50% increase. So instead of $385,000, he'd get about $577,500. His target bonus also gets bumped up to 150%, so that's about $462,000 instead of $308,000, and his health insurance coverage would extend to 18 months instead of 12. This is often called a double trigger severance, meaning it only kicks in if both his employment is terminated and a change in control occurs. This is designed to protect executives from being let go right before a deal closes, potentially losing out on the benefits associated with that change in control. And if there is a change in control termination, any stock awards he hasn't fully earned yet would immediately become fully vested. This means he would get all of his stock right away, which could be worth a lot of money depending on the company's stock price at that point. This makes the compensation package quite substantial in the event of a change in control. Under item 7.01, the company also mentions they released a press release on the 17th of July announcing this appointment. You can usually find these press releases attached to the 8K as exhibits, giving a more public-facing announcement of the news. Finally, under item 9.01, we see the list of exhibits filed with this report. The most important ones here are Exhibit 10.1, which is the actual employment agreement, and Exhibit 99.1, the press release. These documents contain the full detailed language of the agreements. Looking at the bigger picture here, SPIRE Global is clearly investing heavily in bringing in experienced leadership to drive commercial growth. Eric Mellinger's background in defense and space sectors and his success in building sales pipelines suggests SPIRE is aiming to significantly expand its reach and revenue in these areas. The generous compensation package, especially the stock grants and the robust severance clauses tied to a potential change in control, shows a strong belief from the company's board that this hire can make a substantial impact. It also suggests they are potentially preparing for or anticipating significant growth or corporate events. The focus here is clearly on sales execution and market expansion, and they are backing that strategy with significant financial commitment to their new Chief Commercial Officer. The risk I am watching is whether this new leadership can translate this investment into tangible revenue growth and profitable operations for SPIRE Global. Ultimately, the success of this hire will be measured by the company's ability to capture new markets and increase its overall market share. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more. The tools I use for research are linked in the description.